July, 11th of July. I don't know why, but that rings a bell for some reason. So if you hear a bell ring at some stage, let me know what that means. And it may mean nothing. It's just something going around in my head. There's lots of things to do on a daily basis. Hi, Lewis, and hello, everyone. Thanks for being our trading buddies and joining the show for today. Of course, I will be joined by Ash in the not too distant future. Simon will be in as well, talking crypto, and what an interesting point that is at. I'm sure people are starting to sharpen their knives, ready to get back into crypto, or are they? Simon will give us a rundown on that in the not too distant future as well. No George today. George is up a mountain somewhere, and I did see a picture on his, well, he posted it on my page, I think, with a bottle of wine and a couple of glasses and a nice view. Sounds good. Righto, let's get underway, shall we? And start where we normally do, with the pound versus the US dollar as London Open approaches. Of course, those of you who haven't been in for a while or in for the first time, welcome back or welcome aboard, as the case may be. This is a system, that's not the system. This is a system that we've been trialing for ages and ages and ages. It's an age-old, sorry, it is an age-old trade, I'll call it trade, where what we're attempting to do is catch the breakout of something as London opens. And we're using pound US dollar as the yardstick because it's probably the most traded pair at London Open. Okay, so what are we seeking to do today? Well, the latest version of this, I have opted to go with Asia session breakout. Now, Asia session begins here, Tokyo Open, and the high of that session today was, oh my God, I can't even read it, 120.28, 1.2028, and the low of the session was 1.1965. Now, that is the range that we're trying to break, okay? What we do now, the new system I'm using, is we find the midway point of that range. And if we're below the midway point of that range, we place an order long at that level. If we are above the midway point, we place an order short at that level. Stop loss at the high of the range, stop loss at the low of the range, depending on which way we're going. Now, I'm going to add my own filters to this as we go, rather than just trusting it out of hand. And the, pardon me, the system says that we go long here, so we actually buy at that point. I am not going to do that. What I am going to do is take notice that we've got a daily pivot sitting here. Yes, it has been broken and to a point retested, but we've also got a weekly pivot sitting here. And if we're going to take profit at the high of the range, which is what we would do, so we're after 1-to-1. So enter here, stop loss here, take profit here, or take first profit here. Our ultimate goal is 2.5-to-1. So I'm just explaining this to everybody who is not aware of how this works or how it works currently. Again, this is a test or beta system where I will gather the information that we collect, and if it turns out to be a profitable system over time, then we will actually use it as a trade. I am only trading this at 0.00 something of a percent because it is unproven, and if you are doing that, then okay. Otherwise, I would leave it alone until we do prove it. All right, so today there's no trade because I don't want to trade straight into the daily pivot. There's our entry, and the weekly pivot is before 1-to-1. So that's a no from me. I think that's a silly trade to take, frankly. Righto, so what am I looking at today if I'm not looking at that? Well, as always on a Monday, I'm looking at weekly game changer bars. And really, it's a very uninteresting array of game changer bars that we have this week. What's a game changer bar, you may well ask, if you are not familiar with it? Well, really, if you looked up key reversal bar in any technical analysis Bible or textbook, you would find a description of a game changer bar, which well, maybe you don't, but my version of a game changer bar is a bar or candle, if you like, whose low in this case is lower than the previous day or week, and which is closed on or near its high. Now, this is really a 50-50 go. Has it closed near its high? Well, it's nearer to its high than it is to its low, that's for sure. But the spinning top doesn't really fill me with any joy at all in terms of a game changer bar. But technically, I suppose if you were to put my arm up behind my back, I would say, okay, that's a game changer bar. Do I want to go long here? Answer no, not on your life. We do have a break of a trade line on the daily chart here and the retest of that. So that suggests to me that the potential direction is short, not long, until we get above that level. So if we did get above that level, came back and retested it, that would give me a higher low and I would be able to trade it long. But until that happens on a smaller time frame, then the answer is no from me. I don't want to trade Aussie dollar long. The second is Cad Yen. Very similar to Aussie dollar. It's really not a bar that you want to take on or take home to your mother and show her and say, this is the one. This is not the one. This is again a spinning top, which is preceded by a high test bar. Then you've got the low test bar suggesting we go long right at the highs. No, it's a no from me again on CAD versus the yen. There's one other, and it is pound versus yen. And not dissimilar, what a dreadful chart this is. We've got high test bars, double top, lower high, and low test bar, high test bar, low test bar, low test bar. Where's this going? Pass. Got absolutely no idea. We've also got the pound involved here, which of course is subject to Johnson's resignation and the interpretation of that as far as the market and how the market reads that. Maybe they don't read any difference at all, because we're seeing still indecision a couple of days after he has resigned. The jury's out on that, of course, and so am I. I've got a trade in the market pound Aussie, and I'm right at the point of, okay, do I stay in here or do I not? I haven't taken any profit on this at all, and I got in here. And of course, then Boris resigned and put this into extreme doubt. Got no idea where it goes next. What I can tell you is the circumstances under which I took the trade have not changed. And I see this as a potential long here, given that my reading of this chart suggests that this is a pretty good example of a sentiment cycle. And for that reason, that would be the aversion point, if this is indeed a replica of the sentiment cycle. If it is, and that is the aversion point, then this goes to here. And that's why I'm happy to take that position. Boris has made a little bit, cast a shadow of doubt over that, I've got to say. But other than that, I have no reason to get out of the trade at this point. I would have reason to get out of the trade at this point if we were to get a close below this low here, I think. In fact, I'm very, very seriously considering moving my stop loss up to there, or maybe even selling this pair at that point. Haven't made a decision on that. We'll see how this 4-hour candle closes and make a call then. That's pound Aussie. Also entered a trade on Swissy yen on Friday that I didn't put in the Telegram group. This was pretty much a freestyler, and I was looking for break and retest of the monthly pivot, really. Got into TP1, our TP1 was here. So this is not at risk. Well, actually it is, I only took a third off. It's at small risk. And if it were to come back and hit my stop loss, I would suffer a small loss on this position. Nothing to do here. We've got the monthly pivot and the weekly pivot protecting our stop loss at the moment. If the market has decided this is not the time for the yen to strengthen, and you would be forgiven for thinking that would be the case, then this stop loss will be hit. If it is, it is. It's not the end of the world, but there's a little indication of a head and shoulders here. Break of the neckline, which is there, and the retest, which is pretty much why I've taken that position. It's only a small speculator at the end of the day. I don't think any of you would be in that on my behest, because as I say, I didn't put it in the Telegram. But they're the only two positions that I'm holding at the moment. I have a watch list that consists of two, and neither would be new to you guys, I'm sure. One is Aussie Kiwi short, and I continue to hold that bias primarily on the realization in my part, or on my part, that price on Aussie Kiwi does not like to dwell above the 110, or at least in this area, any time for a long time. And we've kind of reached that area again. We almost got up to 112, in fact, but you can see since 2013, we've been unable to breach this area. And I don't see why that would change anytime soon, to be fair. And for that reason, I'm bearish Aussie Kiwi and still looking to get into it. Well, I got into it once and only got a break-even trade, I think. But I still see that that head and shoulders sitting here. The problem is it won't go through the neckline. Top of the range, current range, I'm happy to trade it short if I get the setup. Didn't want to trade it today because of the pivot situation. Be trading straight into the weekly pivot, but which is, of course, has already happened. And now I'm looking for a lower high based on this area here. Pivots are very, very close together. It's a tough position, really, at this point. I'll just hang around until I get something that suits my eye, and this doesn't currently. The other one that we failed on last week was dollar versus the CAD. Now, I can't remember what caused this horrendous rally after we'd been taken into the trade, expecting a TP1 just above the monthly pivot, sorry. Didn't happen. Yet we find a nice little pattern here. 1, 2, potential 3 little Indians. And I said at the time, this may well be an early entry on this, but the setup was there as well, not necessarily the 3 little Indians, but the re-entry back into the range, and then the lower high, which is what we traded, of course, this bar here, and it didn't hit our TP1, somewhat frustratingly, and we lost that trade. It's really a matter of now waiting for price to get back into here and prove that this is a third false break of that range. Once it does that and gives me the lower high, then I'd seek to trade that short on the back of those 3 false breaks. And really, at the end of the day, that's the only thing that interests me at the moment. I think it's a very, very ordinary market, to be fair. I'm waiting very patiently on the NASDAQ, the S&P 500, and the Aussie 200 to get off their bums, frankly, and rally up to the point where I think they're going to be selling, or I'm going to be selling them. That's not now, to be fair. I want to see a little bit more out of this. In the case of the NASDAQ, I want this back up to this level here. So it's got a long way to go on the daily chart. Am I looking to trade it long? No, I'm only biased short this, as I am on the S&P 500. This one's a little bit better in terms of its position because we are at a strong resistance level. So if I did see an opportunity to trade this, it would probably be as a false break of resistance. But you can see on this channel that's forming that there's probably potential for this to go higher as well. So again, I'm not keen until it does give me an ironclad setup. I don't know why I keep dollar yen on my charts. It's just a horrendous thing to trade. And I've got no interest, but I thought I'd just click on it for something to do, frankly, and to entertain Lewis. That's the only reason. G'day, Ash.
Hi, mate. How are you?
Oh, look, top of the world, mate. Top of the world. It's Monday.
Yeah,
Is there a better day in the week? No, there's 6
Monday,
better days in the week.
Yeah, it's my least favourite day. I've got to be honest, mate. It's my busiest day, so I just I don't enjoy Mondays, of course. Like this is the probably the highlight of my day though. Monday, I like this show, and then after that, it just gets manic for me. So
okay,
yeah.
Fast forward to Tuesday, eh?
Oh yeah, I'd love that. let's talk about the FTSE, mate, because the FTSE.
Yeah, what's on the radar, mate?
Well, I mean, there's a possible short. I am in short on the FTSE, as many of you guys know, and there could be a possible short, and it might even be a nice bar to kind of put an order in as well. Let's have a look at it, and talk about some of the reasons why it could be a short at this area. I've got a feeling it may not be. So let's talk about the big picture first, because I think the market is, as you just said, going short. So looking for S&P shorts, looking for Nasdaq shorts, looking for FTSE shorts is the idea here. But it doesn't necessarily mean that this is the best spot. So let's just have a look.
Sounds like we're on the same page, mate.
Yeah, I mean, this is so. I have got a short. I've got a load of shorts actually on the FTSE. But I think we might rally up to this weekly pivot on the FTSE before it actually does start to come down. Let me bring it onto your guys' chart so you can see on the UK 100s. For you, it looks like See, the UK 100 is different to the futures, but it looks like it could still come up there. We've got an inverted head and shoulders here. But if you look at the bigger picture, the broader picture, there's like this head and shoulders pattern, which is kind of forming down the bottom of the trend here. Where I think the FTSE is going is probably to test these lows again. But do I think it's this morning? It probably isn't. I mean, if you were going to sort of set yourself a trade, it's probably under this particular bar, which will keep you out of trouble. You know, if you're going to enter in, you'd probably go in under there and you put your stops probably at the high of this. Now, Paul wants me to mention that if you guys are trading this stuff, you've got to still use the right risk. You know, it's fine to use the price action, but you've got to use the right risk. So make sure that if you are using ATW strategies, it's fine to trade this. You won't be able to trade it the same way as me because it's probably still a mystery to some of you, but you can trade it using a strategy where you enter at the low of a bar at least and put some sort of stop at the high of a bar or high of a range. So this area here is a possible short. The weekly pivot is probably a better short. And let's have a look at what that weekly pivot, where that weekly pivot is. 71.61 on the 5. So that's the chart I'm currently on. Look at this 15. That looks like a pretty strong bar right now. It's got 3 minutes to clear. That's looking pretty good. So doesn't appear that this is the right time at this particular stage to go short. So looking at this on the hourly, this would put you, the weekly pivot would put you right on top of this trend line as well, depending on kind of where it happened. But it'd be pretty close to that trend line. On the 4 hourly, this is the trend line from above on the 4 hourly, which we haven't even quite tested. Didn't quite get to the weekly pivot last week. Didn't quite test that trend line. So the overall picture is quite negative. And if you go through the list, I mean, I'm looking at the stocks right now. The stocks that are rallying, interesting stocks that are rallying right now. SSE, which is an energy provider, and National Grid, which is another energy provider. Unilever, I find quite surprising. You know, Unilever sell a whole bunch of products to the world. And I'm quite surprised that they've got any kind of positivity this morning, because as prices go up, it's those companies that sell lots and lots of products. I guess they sell staples, which might be sort of one of the reasons that they are doing okay. But if you were to go, I don't know if it's the same in your country, mate, but over here, if you go into a supermarket, they sell the brand name and they sell their own product. So, yep. And their own product is usually cheaper than the brand name. So if you go and buy, I don't know if you guys have got Fairy Liquid, but if you go and buy Fairy Liquid, you can also buy a Tesco's version or a Sainsbury's version, or a Lidl version of Fairy Liquid. And they're not sold by Unilever. So I'm surprised that Unilever's got anything going on right now, because people will be making cutbacks. 18% higher for a breakfast over here. If you're going to go out and eat out. So prices are obviously going up. And when prices 18%.
Cool.
Yeah, 18% higher for a breakfast from the same time last year. And
I have to cut the hash browns out for the sound of that.
Well, yeah, absolutely, mate. I mean, that's obviously. Or
the smashed avo. One of them's got to go. No, bugger the smashed avo to go. I'll keep the hash browns.
That one surprises me. But what doesn't surprise me, Shell is down, BP is down, Rio Tinto is down, Glencore's down, Anglo America's down, mining commodity stocks and oil stocks down, banking stocks, HSBC down by almost 1% this morning. So what's kind of they're the big things. They're the big sectors in the FTSE. You've got kind of commodity stocks, sort of mining stocks. You've got the oil stocks and you've got the banking stocks. And if you think about the overall picture right now, oil stocks are currently doing quite badly. And now we've had the initial kind of surge in prices because of the Ukrainian war. Now we switch to recession fears. And if recession does come in, of course, oil will start to diminish because there'll be less reason for goods to travel from one place to another, and less people for reason to go on airplanes and all sorts of things. So oil could come down. And if we look at oil, so you could look at oil for a view on the FTSE 100. And if you look at oil, what we started to see with oil is what looks like a potential breakdown off this weekly pivot, looks like a setup for a short off this trend line as well. Looks like there's enough touches there to call this a pretty good trend line. So a trend line there. Is it through on the weekly? Maybe not if you take this particular into account here. But when you look at this point here, it does look like it's through. So oil suggesting, this suggests that oil is coming down, possibly to 84, but I would have thought down to at least the lows of this area here. So looks like oil is looks like the oil sector is possibly going to come down. If that happens, the FTSE's coming down with it. And then you look at copper for the mining picture, and looks like copper's actually on support, bouncing off support. So it could be that we get some sort of surge in copper, but it could be that copper's coming down just a little bit further. There are sort of trend lines which suggest that copper could be as low as 280, currently at 350-ish. So copper could come down further. That's going to put pressure on the FTSE. And then you go to the banking sector, where you would normally see yields that the bonds are paying, helping the banking sector. The difficult thing that the banking sector has got is that one of the ways the banking sector makes money is that they kind of borrow off the customer at the short-term yield, and then they get paid back from the customer in the long-term yield. And when you've got the yield curve decreasing, which just to kind of put that in a bit of context, let's see what I can do here. Let me show you what. Let me show you what that means, just very, very briefly. What I need is that. Let's get rid of some of this. So if you've got the 30-year, let's say, so you think about the banking sector and you think 2-year, 30-year. Now, if this was a chart here, and you've got 0, 1%, 2%, 4%. So let's say that the 2-year and the 30-year. Now this is the yield off the banking stocks. I spelled that right. So if the 2-year is doing this and the 30-year is doing this, this is what they mean by the yield curve is flattening, because the 2-year should not be catching up with the 30-year. They should be going up either at the same pace, or the 30-year should be going up harder. And the reason for that is that if you get expansion, you expect that expansion in an economy to go further into the future. You don't expect the 2-year yield to effectively say the Fed can raise interest rates in the short term, or the central bank was raise interest in the short term, but it won't do it in the long term because the economy won't be able to handle it. So if the banks are effectively borrowing money from the customer along this line here. So the bank's borrowing here. And they get paid back. What's the right term for that, mate?
They get paid back. You mean their mortgage repayments?
Yeah. So consumer pays back. So the consumer pays back at this rate here. If this starts to squeeze, then banking profits are squeezed, which is why we're not seeing the banking sector, considering the yields where they're going. This is why we're not seeing the banking sector, certainly in this country, start to really take off. So the flattening of a yield curve is bad for banking. So where normally you'd say interest rates going up is good for banking stocks, in this environment it's not, because it's not able to, because they're not able to get enough margin between what they're borrowing from and what they're getting a return from. So banking sector in trouble, oil sector potentially in trouble, and the mining sector in potential trouble. This is sort of like a coarse kind of way around sort of saying, showing what's going on by only looking at a few things. But this is the kind of thing that we want to see when we're looking at something like the FTSE. The FTSE is very, very connected. It's really connected to the business cycle because of those particular sectors that it's got involved in it, more so than the tech area, let's say. So if the business cycle starts to diminish and the banking sector, the commodity sector and the oil sector start to diminish, then the FTSE is much, much more, I can't think of the word, but it's in tune with those factors. So recession is really bad for the FTSE. It's almost kind of a front runner when things are expanding, and it will be a front runner if you like, if things are contracting. So FTSE does not look good for these reasons, mate, and that's the reason I think overall the FTSE is a short. Whether it's here, as I say, is questionable, and actually there is a rally on with the FTSE right now. So we are starting to see the FTSE start to rally, and it's just a case of where it goes. As I say, this looks like a decent short at 61.60. Now we also do have inflation data out this week, and the inflation data may just trap things off a little bit. So while we are at these lows, we might start to see the stocks rally. What you were saying about the S&P. S&P has managed to hold its monthly pivot here so far, and it might well rally up into the CPI data due out on Wednesday, and then possibly start to come down. But you can see that the big picture for the S&P is pretty weak, and maybe we even get a rally up to this point. Maybe it happens a little bit later. What's that? The 13th. That will run into Wednesday. So it's possible that the 39.60 area, 39.50 area is the high with the S&P before we start to turn over. And that may be Wednesday. What, of course, could happen is the CPI data comes out and the CPI data is actually negative, which actually puts pressure back on the Feds to possibly say you don't need to go at 0.75 next time round, which will probably cause the stock market to rally. So we've got a couple of days where we are flip-flopping, with decision making. So you've got a choice. You either try and get in a bit early, probably, and possibly have to go and hold some positions and get through some pain, or you wait until Wednesday and then you put your positions on either just after the data's out or just before it, depending on where the price is. So a few decisions to be made, I think, by traders this week, mate. Certainly for the first half.
Mate, I noticed there wasn't much of a blip on your FTSE chart on when Boris, was it Thursday night or Friday? Might have been Friday, I can't remember.
Yeah.
Market doesn't seem to have cared too much.
Well, the thing about Boris Johnson going is that as much as he is a unique character, it doesn't really change things. A party in power losing their leader it's a factor, but it's not a huge factor, particularly when you've got enough candidates coming forward and saying, you know what, I'll take the job. What will cause the market to react is if they have to call a general election, because again, you've got uncertainty coming in. But he's staying until October, potentially anyway. He's going to try and hold on till October. So there's not really, nothing's really changed over the last few days. Yes, we've got a resignation, but nothing's hugely changed. And if there's a nice smooth transition, then you've still got the Tories in. You've still got probably similar, the guys going, or the men and women going for the leadership candidacy. They're all front benches, so they're all part of the decision making anyway. So it's not massive, really, that he's going to a degree. To the man on the street, I guess it is. But to the country, will it be? I don't think it will. I really don't think it will. We'll lose him buffooning around and doing this, that, and the other, but policy won't change hugely.
Well, I guess that raises the question. And from where I sit, he's lost, or the party's lost, what, 50 members? Is that right? So in the vicinity of that, right? Does that then, have they still got a majority in the parliament?
Yeah, quite a big one. Yeah.
Okay. So then nothing has changed. The interesting scenario would be if all of those people who had left the party in a minority government. How would that work? That would be weird. Yes. But okay, it's not the case.
Or in a coalition.
Yeah.
Yeah, no, that wasn't the case. No, he had a pretty good majority. Okay. He was at least 100 seats plus up. So,
and hence the market doesn't care. It would appear.
Not really. I mean, it's, as I say, mate, there might be another twist and turn in it, but actually, because I was the same as you, I saw the headline and thought that's going to affect things. But when it didn't, you have to start going, well, why not? And actually, when you think about it, maybe there's, we've still kind of got status quo in many respects. So, and they were a terrible band. So, nobody really wants that.
So he's drained the swamp, in other words.
Yeah.
Oh dear. Will they ever get lost?
They were a shocking band, you're right. I'm good, guys. How are you?
Yeah, fantastic, mate.
Brilliant.
Actually, I think I'm getting a bit of a sniffle. I've only just noticed it in the last 10 minutes.
It's winter over there, right?
Yeah, mate. Yep.
It's bloody gorgeous there in Ash. Bloody gorgeous.
Oh, it's amazing, mate. Do you know what? I'm back.
Well, it's gone over 10, has it?
It's over 10, mate. You know what? I'm not a all year round swimmer. And I can handle a little bit of cold, but the sea is actually brilliant now. It's like, you can go on holiday in the UK at this time of year. It's lovely. It really is lovely.
It is.
Well, if and when I get there, I'll make sure it's not in the middle of December.
No, don't do that.
How do I shrink this down? I just do that, do I? I just wanted to, before we have a quick look, because I'm in complete agreement with you guys on everything you just said. But the last time we met a couple of weeks ago, I think it was, and I spoke about how we go short and how we do stuff on these leverage platforms. And what I didn't do and should have done was just showed you one more thing, because if I just click that, at the minute this platform's set up to go long at 7x and short at 10x. If I want to go long and I don't want to use leverage, I just slide this thing all the way down here to 1.
Oh, brilliant.
Right, and I'm spot trading. So I didn't make that clear last week, did I, at all?
Do you know, mate, that's really important. That as you say, that's a really, really significant aspect. And it's not for everybody, but I'm really against leverage. I think it's a horrible. Well,
I do too.
That's not entirely true, because of course, when you buy property and stuff like that, you do need it. But when it comes down to trading, I don't like it. I really don't like it. I just think that you can get yourselves in all sorts of trouble. If you over leverage. A little bit is good, of course, because that can get you out of trouble. But when you sort of go too far with it, it can get you in trouble very, very quickly. Yes, you can make money fast, but I really do think that we've got to get, if we're going to approach trading properly, whatever instrument you're doing, we've got to get away from speed. We've got to get away from thinking that we've got to do this thing fast, because you really don't. You can take a lot of time over it, because all of a sudden you just find that you're on the hockey stick curve, and you're just, the speed is happening purely sort of, pretty naturally, because your account has kind of got bigger. So I think that is a really important aspect. So appreciate that, mate. So this is Bybit, isn't it?
Yeah, there's also this funding rate bit here, which is great. So if it tells you if you're long or short, you're going to get paid or you're going to be paying, right? So at the moment, the funding rate is plus. It's not a negative number. So whilst it's plus, the long guys are paying the short guys. Does that make sense? The commissions are paid by the.
That's good.
Right. So if I want to go long now, I've got to pay 0.01% to the guys that are going short. And if that number goes minus, it flips the other way around. So does that mean,
is that like the swaps?
It's like the swaps. Yes, it's like the swaps.
There is a useful feature.
Yeah, there is still a broker commission, but it's really small, and it's about whether you're long or short as to whether you can make some money by being opposite to where everyone else is, which is where you want to be anyway, right?
Yeah.
Interesting. So yeah, that's that. I wanted to clear that up because it was I didn't make that clear, and I should have done. As far as
sorry, mate, this is purely cryptos, isn't it? There's no other asset class you can trade on this platform, right?
Correct, mate. Correct. Yep. It's purely crypto. So it's been really quiet, right? Last week I took 2 trades. Well, actually one, because this is Ethereum Tether, Ethereum USDT. I had a really quiet week. The sun's out. I missed this one here because it just didn't come back. As soon as it broke my momentum line, it gone. Annoying. But I did hit this one. Tracking this one up again, broke through, put my buy box in at 618,786. Got entered on the first one. Lovely, thank you very much. Didn't take this low out, which was a bit disappointing. But because of the way, obviously my stop was up here on entry, but as soon as I got this red bar here after my entry on this green bar, my stop stopped straight down above this green bar. So I'm free trading already. I don't really, what goes on from there doesn't really bother me too much. I set myself a TP down here at these highs over here and got hit on this bar. And that's the only trade I took last week. This week, I'm just looking at my right-hand screen up here, and I'm looking at double top on the US 100, double top on the NASDAQ, I think it is. And I want to go long, but I can't go long until those two up there do something that tells me that I can. I'm tracking this Bitcoin 1 hour chart down to this box. This box is based off the back of my daily chart, which tells me that my fib from the bottom of this move up to the top gives me my gold box in the middle here where I want it, where I will go, where I do want to go long, but I don't want to go long on a daily. I want to switch it to the 1 hour. I want to track this down. I'd like to break this momentum line, come back down somewhere down in here and take it long, but I can't do that until that NASDAQ and the S&P show me that they want to go north. So I've also got Wednesday. Yeah.
Does that, it plays a factor for you, does it, mate? I mean, would you get in before if let's say the S&P and the NASDAQ shape up to go long before Wednesday? Would you follow that and go long, or would you be like, yeah, but hold on, this to be a false signal?
I will follow it. Bitcoin's not going to break through this momentum line unless the NASDAQ and the US get on their way. It just won't happen. Would I get in? Yes, I would, but I'd be with a really tight stop and low risk.
Right.
And that's kind of where I'm at in this boring crypto market. There was one other thing I wanted to just show you guys, because it's
bigger
really
picture for you, mate. Is it still that we're going to see 15 or 10,000?
Bigger picture for me, yes. Number one, yes. Obviously, I've got this this website that I'm just besotted by, and I track it and follow it daily, and it's just a summary of all the, well, it's more than that, of all the risk parameters, and I'll show you why in a minute. But until this one in particular, this is the social risk, until this needle drops below 0.2, where all of these other ones are, And why hasn't it? That's the question I keep asking myself. So if I click on this blue button, hang on, right. What it is, it's the social risk. So it's Ben, who you know, tracking YouTube views, tracking YouTube subscriptions, tracking Twitter stuff, and making sure that parameter, they're always down here at the bottom at below 0.1 when bear markets end. So that's the only one of all of the other, let's call them metrics, that's not below 0.2. The other thing is, and the other thing I'm looking at, where is my charts? Is it charts or is it tool? This is really, yeah, this one. So I am tracking this color. Come on, flick on. I'm tracking this baby, and I want my BT risk, which if I put it in the box, I want it to be below 0.01. At the minute, it's 0.0139. Ben's idea is that when they're dark blue, like all these, that they're below 0.2. And for him, that's an accumulation time to buy Bitcoin. I like this time in risk bands chart here, which tells you how many days we spend. I mean, this is all data, so it's over all 4 crypto cycles. And the amount of time we've spent below 0.01, which is where I want to be, is 134 days out of 4 years, or 4 cycles. So that's a long time, right? That's not much time. If we go to the first cycle, we spent 70 days in my buy zone, if you like, my Bitcoin buy zone. Cycle 2, we only spent 29 days. Cycle 3, we spent 171 days, and the current cycle, we've not been in it at all. So that's what I'm waiting for in terms of my Bitcoin buys. What price they'll be at, I don't know, but until we get below 0.1, I'm kind of not interested. Not really interested.
I love that, mate. That is absolutely brilliant. What are the other bars then? You know, when you get into the middle.
So these are the it's basically a risk metric. So 0.05, as you can see on that box, is 405 days. So if we go back to the risk band, the price color coded risk, the small one. So the first 2 bars will represent the blue one, because if we go back, you'll see that the blue one is 0.0 to 0.2. So that's the 0.1 to 0.2. So those two columns there are basically the blue band. The next 2 columns are the light blue band. The next 2 columns are going to be whatever comes after light blue, which is greenish.
I see.
And that's kind of, I don't want to buy. I'm not going to buy until I'm at 0. I know Ben's been stocking up a little bit. He bought a little bit at 19,000. I'm waiting. I'm going to wait.
I like that, mate. I like that. And are we likely to? I mean, difficult, isn't it? I mean, do you have a view on the broader market or the next potential rally, or is it just like, let's see what the dynamic is next time? Are we going to, because regulations in, because people are a little bit more aware of crypto, are we likely to just get an out and out buy everything like we did last time, or do you think that we might get a little bit more selective next time round?
I think we get more selective next time. And I think that website is great. I love the work he's put into it. But all it is a metric on what's happened before. Bitcoin's never even existed when inflation was at 8%. It's never happened. So it's its first time. And for me, until the Fed pivots, I don't know. I don't know. I just know. I know where I want to buy. I won't go all in because that's just stupid and I don't need to. I do believe that this Bitcoin bottom will be. It won't be V-shaped. It never is. The end of markets, the start of bear markets are accumulation zones. You don't get a V-shaped recovery and off it goes. There's going to be months and months and months where, people can be buying, scooping up Bitcoin at whatever that low level accumulation price is.
Yeah.
one of the really interesting things that I'll keep reminding people, because a lot of my guys keep asking me about when can I buy alts? When can I buy altcoins? Well, you can't, not yet. And if you look at, I'll take Cardano as an example, and I'll put it on the weekly. And if you look at when, let me get this right, 2 sets. Let's get this in perspective. When you look at when, so the Bitcoin bottom of the last bear market was in December 2018. So that was the absolute bottom, December 2018. And people were like, okay, that's it, then we're all off, we're back up. And sure enough, yeah, we had a good rally. But this is Cardano versus Bitcoin, and you can see that whilst it was the bottom for the Bitcoin USD pair, it wasn't the bottom for the Cardano Bitcoin pair, because that came down another 50% after the low. So that's 8 months as well, right? That's September 2019. It's nearly a year. Well, it is a year by the time you get over to here. It's a year of more altcoin pain after the Bitcoin bottom. So I won't be buying anything other than Bitcoin this year as an absolute minimum.
Cardano's got some updates though, isn't it? I mean, is it?
It has, yeah. It's one of the. It's one of the ones that. I missed it last time, and I wish I hadn't. But I'm going to get. Obviously, I'm going to get another chance at it. But I will definitely be buying some Cardano at the end of this year or early next year. Yeah, I missed it last time. All that negative FUD. You know, when you're not that experienced and you hear people going, "Oh, it's rubbish, it's this," the people doesn't go anywhere, doesn't do anything. But when you look into it and you dig deep, you can see that's going to be a cracker.
Yeah, it's a serious piece of kit, isn't it? I mean, you know, I was quite fortunate with Cardano because it was because I had a guy that was just all over it. He absolutely loved it. So all the FUD for me was just like that, and he would always come in and, you know, say it for what it was. But he was a big fan. I mean, he was the other side of it, and of course Benjamin Cohen is too. I mean, he likes Cardano, doesn't he?
Yeah, he's a staking pool, I think, where you can stake. Yeah, he's a big Cardano fan. Yeah. So
is there a measure of what we've lost in terms of, I suppose, lesser lights in this crypto world? How much has been kicked off the face of the planet?
We can do that by looking at the total market cap, which I'm tracking to make sure.
And is that enough, or should there be more?
Enough. I don't think it's enough, because I'm working on. What's that from the top down?
Grayscale failed in their bid as well, mate, didn't they?
They did.
I mean, that's not good, is it? But I mean, it's, you know, I guess it's one of those things that what would be fantastic if there was some really good things going on in the background while we're getting this bearish price action. But the fact is, nothing's good, is it? I mean, it's just like very difficult.
So the total market cap, we talked about this, I think, in the first show, where this is the $3 trillion market cap top, where just before the .com crash, is where I think it was Amazon. Amazon was a $3 trillion market cap. That sold off in that clean out or crash, whatever you want to call it, 84%. We're at 72 right now. So if it's gonna follow that trade, there's still more pain. I'm thinking there's more pain. It doesn't really matter to me, because I know I'm not going to miss the opportunity to buy my Bitcoin at a good price, because I know that I don't know anything. I think that it's going to do what it's done every other cycle. It's going to come down, make a low, and it's going to sit there for 3 to 6 months in an accumulation phase. And that will just be where I accumulate, whether that's 10,000, 8,000, 12,000. I don't really care. Yeah, because I know I'm not going to miss it. Everyone's, I want to get to the bottom. That is the bottom. That's the bottom band. That's all you need to know.
And it's important to have that confidence in the products that you're investing in.
Yeah, no matter what, 100%.
Yeah, and right now it's the only one I've got confidence in.
Yeah. Well, do you know, I mean, the obviously the other side of that is that and you know, it's great, mate, because actually you're not wavering, even though the price is coming down. This is a key, isn't it, to people picking up what they need to pick up. Warren Buffett is, you know, his whole thing was never about a price. I mean, it was to sort of like get the best possible deal. But he was like, buy a good product, get the best price when you can, but get the good product, do your fundamental analysis and everything else. And when you've got a good product, just go out and get the best bargain you can. And you don't care what everybody else thinks effectively, you know, when they're selling it off. So you've got a lot of belief in it, which is brilliant. And I'll be following you. There's no two ways about it. So if it does come down, then picking some up is a good idea. But there is always the reminder for everybody that is investing in anything that, again, it's not about speed. Just get some stuff under your belt. You know, we're not trying to become. I mean, it'd be lovely, you know, if you sort of like managed to get into Bitcoin on the very first time round and held it right the way through to the second high, you'd be done by now. And there are amazing stories like that, but it's really not necessary. I don't think that would make you any happier, if I'm honest, mate. And that's what it comes down to. It would make you richer, but it wouldn't make you any happier.
Just get the word FOMO out of your head. You don't need that word. That FOMO is a word you do not need. We've got plenty of time. There's no hurry. You know, we're not gonna. Well, some people will buy the absolute bottom, but they'll just get lucky. Well done to them. Well done.
Exactly.
I bought it $1,000 more expensive. I'm going to give a shit when it's 100,000.
Yeah. Well, that's the point, isn't it? Is that you know, a big slice of what you buy and sell, and when you buy and sell it, is about luck. Some of it's about emotion, of course, and you've got to control that. But you know, I mean, the amount of times that I picked the high in the FTSE, and then I have to say to myself, you know, I have to remind myself that was pure unadulterated luck, because you don't know when it's going to turn. You can pick a level and it can turn to that particular level, but it might not. You know, the big picture is the important bit. Can you get the general move? Can you get the general direction of something right? And if you can, more often than not, then you're going to be okay. You know, after that, it's money management and whatever else. But I can tell everybody in the room, if you don't use leverage and you get leverage out your head, money management becomes a lot simpler.
Doesn't it?
You had some buy limit orders last time we spoke.
I'll take them out.
I can see that you're now willing to wait until it gets to the bottom, right?
I took them out for two reasons. One, I'm as convinced as I can be that there's going to be an accumulation phase. So why do I need a limit order if there's going to be an accumulation phase and I've got a period of time? You're going to see it happen. Anyway, I've got time. Secondly, I don't like having money on exchanges when there's when there's all this negativity about. That was the one that really swung it for me. I'm like, why am I sitting there with, you know, 100 grand on a bloody exchange waiting for a Bitcoin entry when there's going to be an accumulation phase? Silly. So I took them out.
Do you know, man? And it's another example of luck, isn't it? Because actually, if you hadn't had the time to take them out and you were pushed in already, you'd be in a bit of trouble. But the fact is, you put them in probably at quite nice prices to be fair, to give yourself some room. But actually, as things, and I do that quite often, it's like when you get a bit of a chance to kind of clear your head again, it's like, hold on a minute, man, maybe this isn't the best idea. So, you know, this whole industry is laced with good fortune in many respects.
It is. I completely agree. But yeah, I got filled on the first.
Same as everything, though, wasn't it? The harder you work, the luckier you get.
Yeah, I got filled on the first one at 19,000, just a half a Bitcoin, and at that point, I just went, you know what? I don't need to do this anymore. This is silly. So I'll take it out.
Yeah. Great, cool. So we got no George today, have we, Jeff?
No, mate. No, he's high on a mountain with a wine in hand, having a fine old time.
Very nice indeed. So we got anything else to cover? I mean, I think we've obviously had a good dive into cryptos. We've had a good dive into the FTSE and the markets that way. A bit of a dive there. Currency wise, I have to say that the Kiwi is probably the front runner for me this week. I wonder whether the Cad might actually be one to come down. I say that because of oil. I say that because of, and the Aussie potentially as well. I say that because of COT data and also the seasonality. So I'm looking at the Kiwi Cad as a potential long. And I don't like it because I don't particularly like sort of having two commodity currencies going against each other.
Well, one I agree with, because I want to trade Aussie Kiwi short, but I've been there been there for a month or more, maybe 2 months.
Yeah.
Because as I continue to show there, I don't like it once it gets above $1.10. It's a sell. But I think dollar CAD short again. I lost
so
on
I've
that last week.
got a girlfriend over in Canada trying to sell her condo. That's what they call them over there, right? And she's looking to buy something in southern Italy. Okay. And I'm watching the Euro CAD, because at the start of the year, her 700,000, what she's expected to get, was about 450,000, 470,000 euros. Now it's well over 500. So I'm trying to tell her that you probably got, the amount of time that it takes for this to come down here, and then you want to be sold, and you want to be looking to jump in on the euro.
Yeah.
Because I think
it's an interesting one, isn't it? Because actually, while we've sort of seen the dollar index start to move higher, which is basically the euro dollar, while we've seen the euro dollar move lower and the dollar index move higher, we're getting now to the phase where the ECB are now talking up interest rates. What everybody's looking for is for the Fed to stop and the ECB to start coming in. And of course, if that happens, then there's a rebalancing, because the current fair value is changed. But at this stage, I mean, they're talking a bit of a game, aren't they? The ECB, they're saying, we're gonna start moving, but you look at the data and you think, how can you possibly move? Your economy is in tatters, really. And I know the US has got its issues, but it's nowhere near as bad as the Eurozone. Further sort of like problems again with gas and Putin this morning. So I just don't. The Eurozone seems to me, or the euro seems to me, like a very difficult currency to be bullish on. Things change, of course, but it's not there yet, is it?
The one thing I would ask the question about there is what's the Eurozone's debt to GDP ratio? And actually, can you work that out? Because
you could do. Yeah, you could do. I mean, you don't have to work it out, mate. There's probably a post on
somebody will have it somewhere.
Yeah.
How can that be greater than the US dollars debt to GDP ratio? It couldn't be.
Great point. Do you know what? I don't think you would find necessarily that the Eurozone on the whole would have that. But I guarantee
that's what Spain. I mean. It must be very difficult to come up with a number.
I see what you're saying. Yeah. I see what you're saying. But then if you were to go, you could probably do a general overview by going Spain, Germany, Italy, France, and seeing what their debt to GDP ratio is and divide it by 4. So I think you get pretty close. Spain's pretty bad. Their debt to GDP is appalling, and Italy as well. So Germany would be better. France would be a bit better as well. So I don't think they'd be far off, mate. I mean, we'd have to do it. It maybe a silly statement to kind of get involved in without the information at hand. But
it just seems to me that it would be very, very difficult to have a worse GDP or debt to GDP ratio than the US.
Yeah, but then if you look at Brazil,
but it's possible.
Yeah, because there are countries out there that Brazil's north of 10%. 10% interest rate. So where we're looking at sort of the majors that are going on, and the some of these bigger economies, and we think these numbers are quite big.
Can you say that again? UK, Brazil's got a interest rate greater than 10%.
Yeah.
Holy crap.
Yeah. So and if you sort of wander through.
So why haven't we got a carry trade on that?
Because their economy's so battered that you probably wouldn't trust that you're going to get your money back. So I mean that's a problem, isn't it? And but Brazil probably okay, but maybe that would be a bit unkind to them. But if you were to wander through, and that's the difficult thing about the Eurozone, it's very complex. You wander through the Eurozone and the countries involved in the Eurozone, or that make up the EU, so the 27, you're going to find such disparity between one economy and another that the understanding where the whole thing is going is very, very difficult. So I think you might find sort of some normalish numbers in some respects and some really sort of harsh numbers in other ways. But if you were really sort of like start a digging of how things affect each other, I think you could end up down a pretty difficult rabbit hole. What about short euro CAD is what Lewis is saying. I'm not sure about the CAD, if I'm honest.
It's gone a long way, Lewis. It's gone a long, long way.
It's gone a long way.
Yeah.
That's right.
And of course, if we're heading for recession, then you'd think that the Aussie and the CAD will be two currencies, particularly, that would potentially lose out. You know, they've both done pretty well with a commodity and oil prices going where they were going. But if that's about to flip for a period, then you think that the Aussie and the CAD would maybe not do so well right now. The yen is a place that people may well go. Why they would go there, I don't know. But it seems to be sort of embossed in investors' heads if there's a recession going to buy the yen. So I don't know. I've been splitting these currencies up and thinking about what might move. And I don't know why I ended up at the Kiwi. In fact, I ended up at the Kiwi because some of the other data isn't as bad. But I have to say, this week when I looked, I was finding it difficult to separate the currencies, you know, sort of where things might well be going because of where they all fit. Japan's in a bit of trouble, but it is a recession currency. Swissy still quite like it, actually, as a recession currency and still doing pretty well. Dollar, which side of the balance does it fall on? Depends on which argument you take. The euro, if China is going to be shrinking, is going to be doing quite badly. The Canadian dollar and the Aussie dollar are going to be doing quite badly if you start to see these recession, start to filter through. So I was finding it difficult, I was finding it difficult to find which is the out and out positive currency that you're going to follow right now. I guess it's still the dollar to a degree. Quite like the Kiwi, but it was more about which ones are going to be negatively affected rather than positively affected. And I ended up with the CAD and the Aussie, really.
I think that brings us to what we were supposed to do last Monday, which was talk about which sectors, and getting away from currency and going into equities and stocks. What sectors do you think we will be looking at, given that recession appears to be the only thing on the horizon?
Well, I think you've got to go bargain, and you've got to go essentials. So anybody that provides essentials are going to still sell. So as I say, I mean, today things have shifted around a little bit, but National Grid and SSE, two energy providing companies, water suppliers, people like that is an obvious place that people go and park their money. That's
a great question, because I've had a look at that in the past for a long-term investment, and I really couldn't find too much to trade or to invest in. Have you got any tips? Well,
SSE are a water provider, I think, mate. But
what does that mean, a water provider?
They would hold water in a reservoir, sanitize it, and provide
and sell it. This is in UK, right?
Yes.
Okay.
Yeah.
So we're going to be area specific by the sound of this. If you're talking, water.
Because what about waste? What about waste? Waste companies, Biffa, would be an example. So waste companies are going to be necessary during the period, and that's kind of where you're going, isn't it? All the boring stuff, nothing. No, don't go for anything that is just invented. They've literally just invented something cool, and it's about to come to market, or it's a little way off, And farming stocks, I would have thought would probably do quite well in this kind of environment. Food is always the things that you need. Will probably do quite well. Associated British Foods, is it? ABF. They're another company that might be of interest. I'd have to look at it in a bit more detail. And I'm literally just talking off the top of my head about
green energy.
Green energy. Too early, I think, mate. Too early. I don't know, though. You might be right on that one.
You haven't looked at uranium. You haven't looked at uranium yet, have you?
I did look at uranium. It's very confusing.
Oh, did you?
Yeah.
Yeah. Look, it's a tough one to trade. I think, and what I'm doing is looking at local uranium miners rather than getting into the ETF or the sector. So that's kind of where I'm at. I think they've got the more potential. Because there's a whole lot. There's a shit ton of uranium in Australia, of course.
Yeah, did you know what I find this space? A question for you, Si. Are there any cryptocurrencies that are pegged by a commodity? I mean, are there any cryptocurrencies that we know that there are cryptocurrencies pegged by gold, for example, with Pax Gold?
Yeah.
Yeah. Are there any that are pegged to a commodity, any kind of food source or water or oil or anything like that? Because I think that would be really interesting.
It would, but there aren't.
No. Okay. Okay. I mean, it's so we're back to sort of traditional stocks, and I think we've got work to do basically. If we are going to be buying things right now, then it's tricky because as I say, if we were to look down the sectors, you'd think banking, but I can't see why the banking sector would do that well with the yield curve flattening as it is.
Yeah.
Oil, if oil's coming down, all of a sudden BP are down now. I mean, they're down, 1 and a bit % on the day. They're not tanking. Well, they are tanking to a degree. Nothing in the FTSE 100 in the top 20 is up today. Everything's down.
Actually, talking about banking, and I'm probably a few years into the future here. Maybe I'm not. What happens to the banking sector, in a crypto world?
Well, you got Meld, which I don't know if you're aware of Meld, Cyber. I think that the fact that Celsius. So just for the guys in the room, if you're not aware, there is a banking cryptocurrency called Celsius that effectively got too comfortable, and they've again, it's another case of over leverage, probably a bit of greed involved. And they were lending cryptos out, borrowing and lending cryptos out, and making money on the spread. And they've collapsed effectively. They've completely collapsed. And you got Meld, which is a similar thing that's on Cardano, and they launched last December. And I think they've probably benefited from the fact that I say they launched. They came to market without launching all their products last December. So they launched their coin, but they didn't fully come to market. Now they've probably had a benefit of the fact that they've seen what happened to Celsius. I'm not so aware of any others, but I am aware of Meld, and it looks like a pretty good system. What do you think of that, Si? Are they potential disruptors? One thing about Meld is that's different to Celsius. Their rhetoric is different in as much that they want to work with banks where Celsius wanted to destroy them, from what I understand.
Yeah, I think they've got to find a way of working together, haven't they? Because that's got to be the way. But there are a couple of similar companies like Celsius, one called Nexo, which is pretty much identical to Celsius in the way it worked. Aave is another one. These guys are set up correctly, obviously, right, because they're not having any of the Celsius issues, which I don't, like you said, over leveraged, right? I know that the Celsius guys have got, they'll be liquidated if Bitcoin gets to 13,000. That's their number.
I think that's dropped, mate. I think that's dropped now down to 8. Yeah, from what I understand, they managed to get some liquidity and it's dropped down to 8, which is a safe zone, or you'd think.
But the fact that can even happen, it's like ridiculous, right? Who's going to get involved? That's done. That company's over, right? The trust is gone. No one's going to put any money in there. They may as well just chop the shop on. No one's going to put any money in there.
And they're doubling down by the sound of that.
They doubled down, and do you know what? Interestingly,
wow.
And this is always the sort of like argument with Cardano, is that the head of Cardano, Charles Hoskinson, is similar to who's the guy that runs Celsius? I can't remember his name now.
The Russian guy, isn't it?
And is it? Can't remember his name. But he's very present, and it's the same with Charles Hoskinson. You kind of don't want that. You want the guys to build the thing, put it out there, tell us how brilliant it is, but we don't need to. They don't need to sort of like be the Elon Musk, if you like, and be a real sort of, a face of it, because it can go one of two ways. You can either become a celebrity and release really good products and everybody loves you, or all of a sudden you can do what this Alex Majinsky, is it? That's it. So you can do what Alex Majinsky does, where he comes, does loads of AMAs, and he's sort of like he's out there everywhere, unfortunately, now he looks quite, he looks like he was quite arrogant about what because he was very certain, he wouldn't be wavered on anything, and things collapse. So yeah, I think there's a lot to be said for just doing your thing and just staying in the background. Let somebody else kind of be the face of something.
Yeah. There's a
Who
lot.
owns Nike? You know, it's
Yeah,
who owns
yeah.
Nike? You know, there's so many. I know you get that there are these characters like Steve Jobs, and you get the characters like Elon Musk, and it does work for some companies, but in this situation, it really hasn't worked. You know, to be so present, but I think they almost like the celebrity status. They feed off the fact that they've got a product that you know people are interested in, and then they just want to really kind of lap in the whole aspect of what they've created.
It brings in users, doesn't it? They bring in users by being upfront and celebrities.
Yeah, they're big personalities. Yeah.
Lewis is into telecom. Interesting. I would have thought long term that can only be good, but at the moment, has it gone too far?
Telecoms.
Yeah. Does it need to come back?
What, as in
no
Vodafone?
idea. I've never seen the chart, but it's just my common sense.
The likes of Vodafone and people like that?
I've never looked at them. That was a question from Lewis. Well, it's not a question. He bought into them, and I was asking your opinion, basically.
Oh, okay. Well,
because I don't know. How would I bloody know?
You haven't got a bloody clue. I haven't got a bloody clue at this stage either. So,
you know what? I run a telecoms company, and even I don't have a bloody clue.
Do you know what? We should have this conversation then. If you run a telecoms company, I think we should have these. We should have this conversation. Let's do a bit of research on that. I know we keep saying we're going to do it, but actually, we've only got next week left, and then we're on a break.
We're on holes. Yeah,
and we're on a hollybobs for 2 weeks.
Yep, sounds good. All right. Well, next. Well, Thursday.
Next Monday is our last Monday. It's our last Monday before the hollybobs. So we better
all
do
right,
some
well,
work.
you better have a list of telecom boys.
All right, so that's our job next week. So we're going to talk telecom, and oh god, you know, I've got so much work to do actually delving into this stuff. That's okay. All right, we'll have a look at some telecoms and see what their functions are, and you can smooth out the edges for us.
And poor old Sri Lanka. Yeah, I think we better give Sri Lanka currency a miss, Lewis. Yeah, poor buggers. That's a terrible mess there, isn't it? Wow.
Isn't it? What a mess.
Absolutely horrible. All right, we're done then, I think.
We're done. Yeah, FTSE's starting to come down quite heavily, and it looks like it's going to go down another potentially another 70. So another 1% lower on the FTSE today would not be a surprise. So you got an opportunity to go short maybe now. I didn't think it'd be this early, but it looks like there might be something on. So have a look at the FTSE, guys. And we will see.
Nobody wants to buy the euro either by the look of it. It's continuing to tank.
No, you'd be mad to buy the euro right now. Mad.
Well, I'm not suggesting you do. I'm just saying nobody is.
Yeah. Yeah.
All right.
Clear.
I've got nothing more. So I can't get into the euro. It's too late to get short. Do I want to? Not sure. Everything was pretty much as I said it before. I'm keen on Aussie Kiwi short. I'm dollar Cad short. You may have talked me out of that one. I'm not sure.
Yeah, I'm not sure about that one, mate. But Kiwi Cad long would be my pick. It's got a nice inverted head and shoulders, and I quite like the way things are looking. Actually, I've got to show you this really quickly.
Okay. Oh, last week's trade of the week, Euro Kiwi. I didn't get into it. I hope somebody did.
Right, let me just quickly show you that this is the Kiwi Cad 4 hour, and this particular right shoulder is exactly where I like it to be. Through a trend line, look at that. Through a trend line, so you've kind of got a bit of a double messaging here, technically speaking, that is. And I analyze this Kiwi Cad.
Kiwi Cad, right. Yep.
Kiwi Cad on the 4 hour. And I analysed this before I looked at the chart. I analysed this yesterday, and the Kiwi came up. It wasn't so much the Cad was weak. It was more that the Cad was a bit tepid, and the Kiwi was slightly better than tepid. So the fundamental COT and seasonal picture point us towards the Kiwi more than anything else this week. And the fundamental COT and technical picture point us towards possibly selling the CAD more than anything else this week, but it's not extreme. But I quite like now what the technicals are suggesting, which is an inverted head and shoulders here. You can see left shoulder, head, right shoulder, right on top of a trend line, which is where I like it, because if you manage to get in around this area, and I would be putting stops, you know, well inside. You really don't need stops to be too tight here at all, in my opinion. So you could put stops inside. You could get yourself, let's just do that. You could get yourself stops in there, potential entry, I suppose, above this area, which would probably give you enough room to get to the neckline. And that's really what you'd be after, because then if you can take some profit on the neckline, then you can see if the rest will actually go and it turns into a longer term position. But yeah, it looks like that's going to get you to the neckline. So it looks like a 1-to-1 there, in my opinion, to kind of get you to this this neckline up here on the Kiwi Cad, and that would be my pick of the week.
Wicked.
Okay. Well, I'll stick with Aussie Kiwi short, but it's got to pull back now because we've already missed it. It's already going. Sad as that may sound. Simon, thank you, mate.
Yeah,
You're
thanks,
welcome.
buddy.
You're welcome. Good to see you.
Yep, nice
Yeah,
session. Enjoyed it. And next Monday, we're going to talk about, what are we talking about? Telecoms.
Telecoms.
Right. I'll have a look at I'll have a look at my local telecoms and see what I can find. Have a great week, everyone. Thanks, Ash.
Yes, guys.
Thanks, buddy.
Thank you, all our trading buddies. Really enjoyed your company as always, and just hang in there. It's not a really easy market at the moment, intraday in particular, but there's a few ideas that you can take away with you. Hopefully, they will come to fruition. Have a great week ahead. And again, thanks for being our trading buddies. Bye-bye.